So basically, the Bank Negara left policy unchanged on Friday, like many expected. Now, what I found particularly interesting is that they did make note that their currency has weakened. And I think in regards to whether any more controls could be put into Malaysia, I think they have a wait-and-see approach right now. But although most of the pressures on the ringgit are external at the moment, we are going to see an increase in domestic pressures once we turn into the final quarter of the year, such as the ringgit depreciation would lead to less purchasing power for Malaysian consumers, and also it would increase inflation.
Might there be a point where Bank Negara might take on an easing bias?
Now, this is the problem. The Bank Negara currently find themselves in a little bit of a catch-22 situation, because if they do ease monetary policy, this would most likely weaken the currency even further. But at the same time, because I'm currently seeing that inflation pressures for Malaysia are building, and they will peak around the turn of the year, they're probably going to wait until these inflation pressures do peak before deciding whether they might actually need to raise interest rates.
Now, looking at some supportive potential factors for the ringgit, a rebound in oil prices, of course, would provide some upside potential. But seeing as how WTI, for example, saw a weekly loss of 3.1% last week, what kind of assumptions can be made for ringgit performance this week correlated to oil prices?
Yeah, basically any rebound in the commodity markets would be supportive for the ringgit, but because the sentiment towards the commodity is still a little bit at risk, I do think the oil markets are vulnerable to further decline, specifically this week with weak data coming out of China this morning. This would mean that there are some risks ahead for the ringgit in the coming days.
Najib this morning also saying that Malaysia isn't alone in facing currency weakness, and Fitch Ratings coming out with a statement that emerging markets are more at risk from the U.S. rate movement than since 2008. What are your thoughts on that?
Yeah, I mean, Malaysia is not alone in this currency weakness, and emerging market currency weakness is very much a global phenomenon right now when you've got investor sentiment being pulled by US interest rate anticipations, selling in the commodity markets. There's China risks in the markets right now. So basically, this is a global phenomenon when it comes to emerging markets. I mean, it's not just Malaysia. We're seeing weakness in Indonesia, the Indian rupee. Even more developed economies are facing pressures with the weaker commodity prices, such as New Zealand and Australia.
In a recent survey, Moody's participants see the ringgit stabilizing potentially to 4 to 4.50 to the dollar in the next 12 months. Do you share the same sentiment?
I do think it's looking very likely right now that the ringgit's going to continue depreciating. I think that it's pretty hard to find a floor for ringgit weakness right now, because basically, although all the pressures might seem to be external at present, we are looking at some domestic risks. So what would be positive for the ringgit is if the commodity markets stabilize and the China markets as well find some kind of stability. But I do think it is most likely the ringgit will stabilize around the 440 area.
On that point of external risk, Jamil, recent China data, disappointing. We do have the FOMC meeting at the end of the week. How will that play out in the ringgit performance?
Yeah, I mean, this China risk, they continue to the markets, and basically economic data from China right now is continually pointing out that the economy is entering a deeper than expected downturn. Now, this is where the risks to the actual global markets are more than China itself, because China can handle softer economic growth. But the problem is that so many economies are reliant on trade with China, they're going to have to suffer the fallout from basically a decline in China trade. Now, in regards to the US interest rate decision, I do think that it's important to look at when the dollar was weakening dramatically in late August, the emerging market currencies were still failing to basically rebound. And this just suggests that the sentiment towards the emerging markets right now is currently very weak.
Final question, Jamil. Do you think it's going to be a one and done or a none and none for the Fed this year?
I think that the US economy is building a lot of momentum. The economic data is sustainable and it's looking very consistent. And I think that actually it would provide confidence in the global economy if the Federal Reserve carries out its continual pledge throughout this year to begin raising US interest rates. Now, if the Federal Reserve did leave rates unchanged, this might suggest to the markets that the Federal Reserve are also nervous about what's going on in the global volatility, and this might weaken the investor sentiment even further.